Today, Asian stocks climbed following better than anticipated Chinese trade data. The country reported a January trade surplus of more than $31 billion compared to the $27 billion expected by economists. Now, I'm joined down the line by Jianguang Shen, chief economist at Mizuho Securities in Hong Kong. So how surprised were you by a 10.6% figure? And would you actually be skeptical of the figure due to the New Year distortion?
I was also slightly surprised by this 10% growth in export number. Actually, my forecast is 5.5 versus 0% in the consensus. But the strong exports has been expected due to this recovery in the Europe and the U.S. economy. But the number is still indicated a very strong recovery in Chinese export to the advanced economy. But I'm not very skeptical about this data because I observed the Chinese actually export to Hong Kong declined by 20%. I think normally these exporters are using Hong Kong, this free trade warehouse, to inflate export number. But it's very hard for these exporters to inflate data to Europe, to USA. So I think that 20% down to Hong Kong, to me, it shows that the distortion is very limited. Actually, the Chinese export growth to Europe has been very strong. So I think that's probably indication that the European economy is growing now versus a recession in the beginning of last year. So I do see some improvement in Chinese export, and I believe that's the bright spot for the Chinese economy this year.
Now, I'd like to take a look at the trade relationship between China and Australia, as China's iron ore imports, which are very important to Australia, hit a record high. So do you see trade relations strengthening further between the two countries?
Yeah, I think that the trade relationship between China and Australia has been very good, and the relationship has getting stronger. Also, in January data, I'm seeing 30% jump in Chinese imports of iron ore products. So certainly Australia is a very important supply to China. So I think the relationship has been very strong and will be very strong. But I do see some risk due to the Chinese slowdown investment. So I'm seeing these exports and consumption as the main drivers for Chinese economy this year, but not investment, due to the government plan to transform the economy from investment-led to consumption-led economy and from manufacturing to service-led economy. So that will slow down Chinese investment. That also will translate into slower imports in China's iron ore imports.
We also have the Consumer Price Index and foreign direct investment data coming out at the end of this trading week. So what sort of figures are you expecting to see?
I'm seeing pretty weak, the CPI and especially the PPI. I think Chinese Consumer Price Index will be much lower than the previous months, maybe a little over 2% only. The PPI, this Producer Price Index, will be still in deflation. Foreign direct investment data will be quite resilient, probably similar to the previous month, something around maybe $10 billion investment.
And finally, what is your growth forecast for 2014?
I'm projecting 7.5% growth for this year.
Thank you very much. Well, viewers, that's it for right now, but tomorrow I will be back to have a look at US retail sales, so see you then.